Heidi ho, everyone. Thank you, Mai, and welcome aboard. It's wonderful to have you here on this, the first day of August. So, pinch, punch. It's what you're supposed to do on the first day of the month. At least it was when I was a kid. I don't know if that's changed at all. And of course, if you're equine, I guess there's not too many of you who are equine out there listening, but if you are, have a wonderful birthday, what's left of it. And I hope you get lots of hay as your reward for turning whatever age you might be. I'm particularly interested on horses' birthdays because, well, I haven't really figured out why I lost so much money to them when I was young. So I just like it when they get older and older and older. July has gone and it ended with a bullish stock market, a bearish US dollar, a resilient crypto market, and gold for Australia in Japan. Yes, it's Olympics time, ladies and gents, but we probably won't be talking too much about that today. What we will be talking about, of course, is a whole lot of stuff to do with the markets. Firstly, we'll go to a macro view of those markets. And as always, it's wonderful to say g'day in New Zealand to my good mate, Julian. G'day, mate. How you doing?
Hey, Geoff, how are you? Hello, everybody. How is the world out there? I continue to be amazed at the at what is going on with a just an incredulous eye and also a fascinating and how can I make money out of this eye as well too. Folks, hey, look, today am I going to talk about macro? The short answer is no, I'm not. Right, what I'm going to talk about, for those of you that weren't there, I've just done a great Trader Cafe with Ash. Hopefully you pick up on that and you get the opportunity to listen to it. Ash, as always, has a number of different views about things and really clear descriptions about the world. And one of the key things that Ash said at the beginning was it's all about the liquidity. And I'm a huge fan of this argument, and I think we need to just take a step back some days and think about what that means. So liquidity generally, when you think about it in financial markets, is the amount of money washing around the place. That's really sort of the vague definition, right? When you think about that in more complicated terms, then really what you're doing is you're looking at sort of like bank deposits. You're looking at how well off people feel, what the money in their pocket is, what they're willing to spend. And also, if you're an institution or a fund manager, how much money you've got coming into your funds and how much you're then willing to put back into the markets as a result of that, right? And then furthermore, if you're a corporation, it's how much money can you borrow? And how much does it cost to invest in projects that hopefully yield a little bit more and therefore get the right multiples for your business? So with all of those things, at the end of the day, it comes down to two things. It comes down to the psychology of the expectation of that liquidity being able to carry on. So you're going to spend money on your new car today if you believe that you're going to have more money going forward into the future. If you were a little bit more conservative and you said, I don't quite know about my future, you'd be less inclined to spend that much money on a new car. So I think what we've seen over the course of the last 18 months as the pandemic has unfolded is every single one of those emotions at both a private level, at a corporate level, and at a government level. And I think that's the key driver for me is when do you then turn around at the end of this and say, well, I'm not quite sure what the future holds anymore. Now things are a little bit less certain than they were. You walk back 18 months, I think people felt very uncertain back in March of 2020. And now I think people have a more mixed emotions. There's some parts of the economy and some people and some aspects of the international scene which are incredibly positive and looking great, and probably as the recovery unfolds going to do well going into the future, some time into the future. Well, cherish those areas, invest in them, and hopefully reap the rewards from it. But there's a lot of others who aren't. And I think from here on in, where we've seen the broad definition between call it pandemic friendly industries like digital and the Apples, the Googles and people like that, Facebooks have done tremendously well. And like they euphemistically call it the real economy, right? So think about things that hurt when you drop it on your foot, right? So a barrel of oil and also sugar and gold and all those other things, right? So where we look at the real economy on one side and that virtual economy on the other side, we've had that split. Well, I think that's going to stop. I think we're going to get into an environment whereby people are going to start to more cherry pick industries which are doing well. And therefore, as a result of it, because it's not so consensual, because it's not so widespread, you're going to need to have a slightly different approach. Now, what does that mean for the markets? It means that liquidity won't be as ubiquitous as it was before. It's going to be less widespread and freely available, which then will have consequences. So that will mean that at some point in time, the various asset classes, either on a rolling basis or a collective basis, will not like it, and they will then have a bit of a tantrum and then probably not do very well for a period of time. When that starts, what the catalyst is, I can't tell you for any of those things, but I think it's something for you to really keep a focus on. So when you look for things like liquidity, you're looking for changes in behavior. So the RBNZ, the Royal Bank of Canada, starting to withdraw their support of the bond markets, right? That's really important. Today, this minute, this hour, no. But over the course of time, it becomes important. The Fed beginning to talk about tapering. They're just beginning to talk about it, right? But New Zealand and Canada are already doing it, right? And that's the key thing. Okay, so what's happening to those currencies? What are we looking at? You could argue with a slightly firmer interest rate environment in New Zealand that it would not be unreasonable to think with the same level of interest rates as they have been elsewhere, that you'd expect the New Zealand dollar to do well. Now, we talked last week, I think, and when we had a chat about this, about some of the relative value of some of those commodity dollar currencies and what they were looking at and where we thought some of those currencies were reasonable value, right? We know maybe the Australian dollar, maybe the New Zealand dollar has got to the point where they've sold off so much that they're starting to reverse again. We've begun to see that over this week, as we thought and we predicted in this show last time. So, let's just have a think about these, but it's going to become more specific, right? And that's what you've got to do. There's an opportunity probably in China and in Hong Kong at the moment. Those markets have sold off dramatically. But if you look at them in the sentiment cycle on a daily, weekly basis, we still have a little bit more work to do on the downside before they truly bottom. However, they're a lot cheaper than the markets elsewhere. And I think that's something else to bear in mind. I don't think the Chinese want to stall their economy out. I think they wanted to just make it better in the long run by regulating it more effectively. So think about what that means and how that works. So there's another aspect to it, right, within that. But you've got to overlay people's sensitivity towards the liquidity debate and also towards their confidence debate. Guys, I don't have a huge amount. Why don't I have a huge amount? Well, at the moment, we saw that US dollar turnaround last week. That's begun to unfold. Okay, we've also got Jackson Hole coming up in the middle of the month. That will be a critical time for the Fed. You could argue, if you wanted to, that the best way to get the Fed to stop tapering is for the market to sell off between now and then. I don't think nobody's specifically organising that, but collectively, if that was to happen, that would give the Fed pause and they'd just close the book and say, right, we're still carrying on buying things. We'll see you in a year's time. So, something's important. So if that is the situation, then maybe Jackson Hole is something to watch as we lead into it, not for what they say and do at Jackson Hole, but what the market is doing beforehand and where its level of confidence sits. So bear that in mind. Right? Equally, we need to look at what's happening to some of these inflation figures that are going on in the world. We've already seen new home sales in the States starting to stall. We're already seeing the PMI, so the Purchasing Managers Indexes in the States and elsewhere across the world, start to slow down. We're also seeing a lack of that so-called inflationary boost that everybody's talking about in America. That's also slowing down across the world. In America, it still seems to be going ahead. Month-on-month figures are still growing. But let's say that could be the last of it. There's a lot of stories out there about markets which are sort of alternately going crazy, 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 and then crashing. Just look at the lumber chart if you want to see something that really demonstrates that very clearly. So look, this is the reason why I said, having that holistic view is important. Looking for that information is important. Finding that key driver in the market, the one that's ruling the market right now, is pretty critical. I think liquidity is absolutely vital to see right now. Check out that information on savings rates in the States, right, where it appears that there were two major, through the stimulus checks that got sent out to people, spike in the savings rate. Well, it appears the savings rate has fallen back to where it was in 2019 now. So How about we rephrase that? Americans have spent the money. Okay, so what does that mean for tomorrow? Well, if you spent all your savings, you're not going to suddenly go out and spend X amount more, are you? Especially when prices are rising everywhere. You're going to have less money to spend. So think about how that works as well too. These are key factors we've got to get into our head about what's going on. And are we at one of those crucial tipping points now where we have to be alive? Now you'll say to me, Julian, I can't do any of that. I need to think about the technical picture because that's all I see in front of me. All that other stuff is too complicated and I can't figure it out. Okay then. So here's what we do. Go and look at that Chinese market and the Hang Seng and look at that in terms of the sentiment cycle. That's a technical piece of picture, right? Try and figure out where you are. This is a really good example right now because the sentiment cycle in China is at a way different place to the one in the US right now. Go and look at the one in the US as regards that sentiment cycle. Do some homework around that and maybe look at some of the European markets and see where they fit in as well too, right? Then we need to start looking at those long-term charts, the weekly charts on the foreign exchange. Has the Australian dollar gone far enough, right, to the downside before it reasserts its strength for whatever reason? At the moment, there's a sell-off because of COVID, but it won't be forever. The economy will come back. The country will come back. Do we need to start thinking about what that's going to look like from a technical perspective, right? And have we seen that bottom in the Australian market and possibly in the New Zealand market as well too? And maybe we've seen the top in dollar CAD for the near term as well. These are the things we've got to do. So what are we looking for whenever we're looking for that confirmation, that top? We're looking for a retest or a failure as we then get back up to that old high. Or in the case of the Australian dollars, we go back to that old low. We're looking for that failure. So in the case of the Aussie, it would be a higher low. In the case of the dollar CAD, it would be a lower high. Or we just managed to nick it, right? So the same thing, we get to roughly the same level and then fail, right? So we'd look really conscious to look at market failures for a new trend that may be starting in the opposite direction. Guys, look, that's it for me. I hope you understand what I've just been saying, and I hope that helps you both from a technical and a fundamental viewpoint. Don't forget non-farms on Friday. It's summertime in the Northern Hemisphere. A lot of people are on holiday. That's why a lot of people out there who normally talk are very quiet. And we've got Jackson Hole to look forward to in the end of the month.
Mate, thank you so much. You're talking a language that I do now understand, but I've got to say it took me a long while to understand it. And there are people in the world with the initials who, I won't even mention them, they've got the initials, Julian, McCree, who help you with those sorts of things. Thank you so much. Really appreciate it. That's invaluable information. Cheers, mate. It also leads us into the next wonderful world. And of course, there were a lot of that mixed up with this. And that world, of course, belongs with fundamentals. And our shining light in that regard is with us next. And her name is Alexis. Hi, Alexi. How are you doing? What's going on?
Hi, Geoff. Great to be on.
Great to have you, as always.
Yeah. All right. So I'm just going to talk about the Swiss a little bit. It's an interesting place that the Swiss is in. And traditionally, I'm not a big fan of the Swiss because it's not an easy currency to trade. Being a risk-on, risk-off currency, sometimes it's hard to kind of have an idea of where it'll go. But this article popped up, and if you actually take a look at a bit of the statistics that are coming out from the Swiss side, it seems that the Swiss is doing pretty well, and with that comes, of course, the confidence, right? So a couple of ideas I have regarding the Swiss currency is being a risk-off currency. If there's risk perceived in the currency in the markets, the Swiss franc is one of the currencies where people park in a very easy to understand way. It's just to park their funds while waiting for risk to pass, right? But on the other hand, if you are looking for a currency base to invest in, or you are looking for assets to invest in, Switzerland seems to be doing pretty okay, and that's because the central bank is, has been increasing its investment portfolio in a way. So let me see where's the figures over here. So the Switzerland Central Bank has made more than 47 billion. So this is in USD in the past 6 months. And it's pushed its reserves to more than 1 trillion in value for the first time. So what it means in comparison to the rest of the sovereign wealth funds is that, the huge gains means that the bank now has an investment portfolio larger than most of the world's biggest sovereign wealth funds. So it's comparable to holdings of China, and considerably larger than the Swiss economy itself, which reported a GDP of 824 billion in April. So I think just taking the broad-based sentiment of the Swiss economy, it will be interesting to see whether this sentiment flows or trickles down to the Swiss, right? So if we just compare the two risk-off, risk-on currencies, which is both the Swiss and the yen, you can see that what interests me at this point is you can actually see the Swiss starting to pop out of this range. So it has been ranging with the yen for, I think, June to almost 2 months. So what is interesting that it is starting to pop out of this range. And of course, if the good feelings continue, I would be keen to see whether the previous highs can be hit on the Swiss. If we scroll through the other Swiss pairs as well, you can see CAD Swiss is very nicely trending on the downside. Again, we are also, it is preparing for a break down this level. So CAD Swiss short would mean a stronger Swiss against the Canadian dollar. So I'm particularly looking for technical setups that will allow this Swiss sentiment to go in my favor, right? So what I'm looking for next week is potential for Swiss longs or counter Swiss shorts, right? So CAD Swiss, I'm looking for a short opportunity. Euro Swiss as well. Euro Swiss might have actually flown past might have actually gone past, it's already broken out really early over here. So we might be a little bit late into the Euro Swiss, but it's good to see if we could get some retracements before it hits down. Kiwi Swiss as well, just about broke out of this range over here. All right, so it'll be interesting to see whether it comes back and retest this area before heading back down. So all these are on the daily time frame. Pound Swiss. Let me see, where is Pound Swiss? Pound Swiss, again, it is at the bottom of the range over here, you can see. So again, what I'm looking for is possibilities of Swiss longs. So I'm trying to see whether, on the back of the Swiss coming out strong as a risk-off currency, whether or not it will take off in the sense of a sentiment-based trade. That's all I have. So I'm looking out for Swisses next week. The rest of the currencies, I think, can't really see where they're going now. A lot of things happening. The Jackson Hole, as Julian has mentioned, the non-farm next week. So a little bit hard to probably see the rest. We'll see if the other guys have any more tips for us. Back over to you, Geoff.
Thank you, Lexi. Much appreciated. Looks to me like that Swissie's got either one of two things going for it. It might be a little bit binary with that breakout on the daily chart that showed me Swissie yen. Interesting. That's either going to go or it's going to come back. False or not. Interesting. I'll have a look at that chart myself as of tomorrow. Thank you for pointing it out. Really, really nice. Okay, Lexi, when do we see you next?
I'll probably be joining Lloyd tomorrow on Trading Buddies, I think.
Oh, that show. Very good. Fantastic. We look for, that's around about 5 minutes to 3 in Singapore and Hong Kong. Okay, we look forward to that, and we'll talk more about that a little bit later. Thank you, Lexi. Much appreciated. One of the most important persons in that show, if not the most important person in that show, is going to join me next, and he's going to talk all about, well, data, really, at the end of the day. My trading buddy. G'day, Ash. How you doing, mate?
I'm very good, mate. How's things with you? I mean, you're way too kind to say that I'm the most important. It's definitely a shared thing between you and I, and I think depending on which guest is in on the day, I'll probably take the crown at their particular moment.
Yeah, we're only there to pass it on, aren't we? We like to relay, pass the baton on, relay players.
Exactly.
What's going on with the wonderful world of data, mate?
Well, my wonderful world of data. I'm going to bring everybody's eye to the US dollar. I will mention Bitcoin just in passing, just because it's so bullish. Look at this: 36 months on the commercials index on the COT data at 100%. 18 months, 100%, 6 months, 100%. The longs have increased by 20%. The shorts are down by 9%. So just in passing, I'm just going to mention Bitcoin and just leave it in everybody's back pocket because it is the talk of the town really right now. So it's well worth just understanding that the COT data is certainly suggesting that certainly last week that there was a lot of traders that disclosed that they were bullish on Bitcoin. But I want to bring our eye to the US dollar, really, because it's going to give us a decent foundation in everything that we're looking at. You know, what is going on with the US dollar? Just when we think we're starting to move to the upside, and just when we start to think that Jerome Powell and the Fed are getting quite hawkish on the policy stance, everything changes around again, and we get a speech last week which was quite uncomfortable watching, I have to say, from Jerome Powell. And they look at this stage like they don't really know what to do next. I'm not going to say they don't know what they're doing, because they're very intelligent guys, but they don't really know what to do next with the information that they are currently holding. We'll get to some of the issues with that when we look at gold in a little while as well. But just having a look at what the COT data is suggesting about the US dollar. The 36 months down to 38%. Now, that isn't bearish enough in the extreme for me to say that we are looking for definite sell signals there. I'd really want to see it below 20% or 20% and below to kind of give me an idea that we should be looking at shorting the US dollar over the longer term. But when we do look at the 18-month, the 18-month is down 11%, so nicely nestled under that 20% mark. And looking at the 6th month, massively down under the 20% mark at 0. Commercial longs increased their position by 62% last week, and the shorts were only increasing by 27%. So this is conflicting information, which really kind of states to us that the commitment of traders is in almost the same position as the Fed. You know, they almost don't know what they're doing. Now let's have a quick look at the seasonals, and then we'll talk about how I would interpret this market data in relation to a chart. So if we look at the seasonal aspect of this, it kind of bottoms out over the next couple of months, the US dollar. You know, there's a little bit of up, a little bit of down. Generally speaking, it's in its lower position down here, but there may well be one more or possibly two more moves to the downside. But this would just describe to me that that the US dollar seasonally could be in a lower range. And if we are looking at the COT data again, just to bring us kind of back full circle, the COT data being slightly misleading when we kind of look at the 36-month, but then the 18-month and the 6-month, but the buying increasing and the sellers increasing by only a third of what the buyers are. It's also suggesting that we could well be in a bit of a range. So the way that I would look at this and start approaching the US dollar is to anticipate that there's going to be no breakout. Julian covered Jackson Hole. He talked about Jackson Hole. And it's a meeting of the central bankers. We'll all go there and discuss how they're going to approach the world economy. That may well be the dates that we're really looking for a potential break to the upside or the downside with the US dollar. It's not necessarily going to be the case, but it could be. So that suggests that we could be in a range, and that says to me, sell at the high of the range, buy at the low of the range until we kind of meet that Jackson Hole period. There will be fundamental data that is coming out in between times, and if it's extreme, then we might start to get some movement. But because of that particular date and because it's so significant, and what the COT data is saying and what the seasonality is saying, it's kind of saying to us that, you know, looking for a trend in the US dollar, maybe before we get that important meeting, could be a little bit, it could be a little bit ambitious. So the range traders may well come into play here, or possibly looking for trends on shorter term timeframes to play the longer term ranges as well could be the idea. The takeaway, mate, is to sell in the sell zone and buy in the buy zone for right now.
Sounds like a great plan to me, mate. You've been very, very fortunate enough to have gathered a fair bit of knowledge about the gold market as well in the last little bit. And in the absence of Ainslie today, our golden girl, it would be wonderful if you could give us your opinion on what's going on with that, what seemingly stalled, could I call it a stalled market on gold?
You absolutely could, and I think that one of the other reasons I covered the dollar is because it does lead us quite nicely into gold. So yeah, let's talk about gold now. Gold on the COT data. We'll have a quick look at it. Again, it's a little bit benign. It doesn't really tell us a lot. We can see over the 18-month that there's a little bit more positivity, but the 36-month is still down at the lower end, but nowhere near at the extreme. So it doesn't tell us too much. The 6-month is popping up, but nowhere near 80%. So I want to see 80% for me to be really confident that the gold market is going up. And when we look at the percentage change, longs have changed by negative 0.6, so they've reduced their long positions. They're reducing their short positions by slightly less, but pretty close in numbers there. So not really telling us a whole bunch. And then we open up the chart and we see that the chart throughout August does tend to rally right the way up until October. This may well still happen, particularly, after that particular meeting happens with Jackson Hole, we might start to see the gold rally take effect. If we bring in some of the fundamental aspects of this as well, the first thing I'm going to bring in is the 10-year bond yield, because there is a correlation between the 10-year bond yield and gold. Now, I just realized that that's probably not sharing. So let me bring up this screen now instead. There we go. So I can see, you can see here, during February, we saw the bond yield really increase. So effectively, people selling off their bonds and the yield starting to spike higher. This is negative for gold. So with a bond yield going higher, we tend to associate that with negativity in the gold price. But look what's happened ever since then. We've been moving quite consistently and easing to the downside. Really ever since the end of May, we started to move to the downside with the bond yield. So that would be a positive signal for gold. So we kind of got the picture starting to form. Seasonally, we see strong gold throughout now until October. The COT data hasn't said pull the trigger just yet, so we'll probably be on hold for a little while. Bond yields falling would suggest higher prices with gold. Then if we bring in the fundamental kind of picture of the dollar, because we'll be trading it against the dollar. The Fed don't know what they're doing in some respects, and I don't mean that to be disparaging. What I mean is that they are probably in a state of confusion, because the data is not the kind of data they want to see to make the next move simple for them. What we've got is an inflation spike, inflation easing back a little bit. The rate of change of inflation is easing back a little bit. We've got employment still at elevated levels. Now, what they're doing is shifting the rhetoric to employment. So they're saying now we're going to leave the price points alone. And when we look at some of the price points, core CPE, just a little bit of easing from the last print to this print. We do see that the Chicago PMI is a big spike to the upside. So that's also relatively inflationary for businesses. And the Consumer University of Michigan's sentiment was quite good. So things are showing us that a little bit of buoyancy, but maybe just a little bit of cooling off a little bit with inflation. Then we turn our eye to employment, because it's the employment picture that they're now saying that they're going to focus on. They're going to focus on the employment rate being at a comfortable level before they talk about tapering. They've almost kind of rode back on the talk about tapering. And when we look at the employment picture, the employment is currently, yes, it's fallen, but it's still relatively high. They want to see employment under 4%. Probably more around the 3% mark. They want the unemployment rate to be around about the 3% mark before they are comfortable about raising interest rates. So we've got to watch those employment metrics. Now, what this is effectively telling us is that the Fed are probably more on hold than they are getting ready to start to taper. And then now we bring this back to the conversation about gold. If we know that the dollar is in this kind of rangy kind of position where it's not quite sure what it's going to do, that would suggest the same thing would probably happen to gold as well. However, if the inflation, sorry, if the unemployment numbers don't come down, we're probably going to be left on hold with the US rates, and the positive rhetoric that we heard about a month ago has started to ease back. Bond yields falling, seasonality going up. That would suggest that having an exposure to gold to the upside would be quite sensible. If we look at the weekly chart, the weekly chart has managed to bounce away from this inverted head and shoulders. So we got this inverted head and shoulders level here, where we got the left shoulder here. There's the head, and there's the right shoulder, and we're carving that out. And it looks like we've got a relatively defined neckline along here as well. So there's the neckline there. That's what it needs to break through. The key level that I think that we probably need to take out before we're getting more bullish on gold is probably somewhere around where it's refusing right now. So if we can get a higher low around about 1820 on gold, then we would probably, or then I would anticipate us coming up to the neckline at 1910, and then we'd want to have a look at that and see if it goes beyond. The thing about aiming for that neckline, possibly taking something off the table, possibly just tightening up stops a little bit, it just gives us something to aim for before we get to that neckline and see it possibly go through and not come back again. So trying to get in around about here and looking at this level to make the trade safe on the way up would be my personal preference. So I want to see a close above 1820. I want to see it come back and test this this trend line on the weekly chart. I'll blow up a little bit for you guys. On the weekly chart, all I've done is taken the high in what looks like August 2020, so a year ago today, and I've extrapolated. I've tried to touch this high here in March this year, and I've also taken the low of the end of May as well as a potential level that we need to start to break through. So I want to see a close above here, do something like this, move through this level here, come back again, and try and take the trade somewhere along this level here. Before it goes through that point, because of the slight confusion that is floating around with the Fed and some of the numbers, I'm not really that comfortable. So it looks like around about 1850 that the gold long would probably come into play, and we can really start to add some confluence areas as well. If we have a look at the trend line from the low, if it breaks through this upper line, it looks like it'd be coming back to a horizontal level line of support into a buy zone, test this trend line as well, but possibly with a little wick. Then I'd be looking for a long, and I'd be looking for a long right the way up to around about 1910 before I did anything. So so my idea right now is to wait for the charts to express themselves. If the COT data starts to match as well, then we really are aces, and we do want to then start to build a position in gold. Because it really could explode. We've talked about, Julian and I talked earlier about liquidity. This does actually start to tie back into the gold market. If we've got this situation where there's lots and lots of money sloshing around the market, which is to a degree irresponsibly invested, what do you think happens when we get to a high point? Something happens in the outside world, and then people go, I'm not willing now to pay these extraordinarily overinflated prices, but I will buy from you 10% lower. There's going to be a crash in the global stock market, and when that crash happens, the likelihood is that the best place will be in risk-off assets, and gold will fall into that particular category. So still in a little bit of a waiting game, but overall, I think we should be anticipating to go long on gold, and gold will probably go up then, Helen, yes. You are muted.
Oh, sorry, mate. I'm muted. Yeah, interesting. Just picking the levels, right? Everyone seems to be of the same opinion that gold will rally. It's just a matter of where and when.
Yeah, and as I say, mate, that would be my preference. I think it would be foolhardy to get in anywhere here, because really this is a sell zone. You know, until we go through that trend line, we're really in the sell zone territory, and it might well come down. It might even come and test this low down here one more time. You know, at 1770, and some gold bulls might well think, okay, you know what, I'm gonna take a punt here instead of waiting for the break, and I think that would be okay too. So coming down to test 1770 or maybe this low down here, but preferably a break and a retest would be my preference.
That entry on the weekly chart about 5 weeks ago on Trading Buddies still looking okay, right?
Yeah, I mean the way you picked this market was almost a bit unnerving, mate. Your accuracy was on the money, because actually you picked this level as well as a level of resistance, which I hadn't spotted initially. So I think you're in the wrong markets by ignoring gold.
Maybe I need to start trading gold, right? Okay. Thank you, mate. Much appreciated. What are you doing with your time off?
What I'll be doing with my time off is messing about with Molly, my daughter, and I'll be researching as always. I'll dip in and out. I might even pop in to see the guys on Trading Buddies as a guest if they'll have me. And
can't stay away.
Just generally, it depends on what the time allows, really. If I've got a few moments to get into it, then I'll come on in.
All right, mate. I'll catch up with you on Skype or somewhere else, no doubt. Enjoy.
Great stuff,
and thanks for being Ainslie for a day.
Oh, no worries. I've got my wig, but yeah, not as pretty as Ainslie, but hopefully the analysis is as good.
Now cheers. Now an interesting market, of course, this week and for the last couple of weeks has been the wonderful world of crypto. Now, if I wonder what it is. If you study, I think it's maps, you'd be a cryptographer. If you study cryptos and you're good at cryptos, what would you be? Would you be a shukriologist? Hello, mate. What's going on? You got a bit of a resurgent market, eh?
Yeah, it's all patterns. And if it wants to go up, it just keeps going up. That's just the way it is. And I'm going to show you my boring chart, which now is not boring again. So, guys, see this. I know you've been bored to see this the past couple of weeks, but let's see this now because it's done something. It's done something quite significant. There it is. Look at, isn't that beautiful? I've had this for the donkey number of months, okay? Because as I said, we got to wait until August 16th, right? And I stand by that. And it's done very, very well. It has not done this. Bitcoin has not done this since 2017. What happened in 2017? The biggest bull run. And I think that this is the start of another bull run. This is good. It's done better than I thought it would. Whoa, Bitcoin, can you wait? So here it is. We passed this level of 41. This is good. It came back and retest, now attempting to do that. What I wish would happen, and I think is going to start tomorrow, is that, hey, Bitcoin, let's slow down. Let's hang in here like that. If we want to go down just here, this looks like very strong support. Or we go here and hang here. And after the 16th, I think we're going to go up. And that will kick off the good old DeFi summer and all that good stuff. So 10 days in a row, happened twice. 2012, 2017. It just looks like Bitcoin likes to go up in August. It would get a lot of help from our friend, the US dollar, if the US dollar goes down again, okay? So that's good. Now let's see what the other things, what's happening to the other types of cryptos here. Bitcoin leads, but sometimes you want to go into the smaller ones, right? Because they will have a better movement. I have told you since last week, if you want to see what's going to happen to the summer DeFi rally, Linked has already moved. The DeFi coins are going to start to move very, very soon. We talked last week, this was at 19, hello, 22. That's a great one. But the thing that I want to talk about now is Ethereum and Polkadot. And I want to show you something. This is why sometimes crypto is very, very difficult. Okay, this has finally broke out. near August 4th, which is kind of like London. The best thing you want to do here is just wait it for retrace. Hopefully there's a disappointment on London, hard fork, which is coming on the 4th of August. You guys want to remember, Ethereum always does this. Ethereum has this bad habit of disappointing us. My advice is, if it disappoints us, okay, good, it's here. If it disappoints us, if it goes on a dip, I will definitely be a buyer, notwithstanding that I already have my accumulation of Ethereum. But other than that, this is the time to look at fundamentals. So those of you that came to the class saw an example of this, right? What happens, like you see Binance coin going up. Why did Binance coin go up? It went up because the supply was reduced. Now, the thing about crypto is it will fool you into selling that Binance coin. It kind of fooled us because usually before the supply is reduced, it goes up. It didn't do it, okay? It waited until the supply is reduced, but we're clever now, right? Fool me once, shame on you. Fool me twice, shame on me. We shall not get fooled, okay? And I want to show you something about Polkadot. Why is Polkadot going up? You guys know, right? Geoff asked, did you ask me last week? Geoff, you said what to buy, right? I said—
I did, mate. And you told me Polkadot.
Yes, it's there. It was at 13. Now, let me tell you something. Why is this happening? You guys in the private group should know, right? Because the Polkadot crowd loan is coming again. And because of Geoff. Because Geoff wants to go in the crowd loan. So it's there. It's just because of supply and demand. Because in order to get in the crowd loans of Polkadot, which is a form of IDO, you have to buy it. So it is just like that. And this is the tough thing about crypto, okay? When you want to buy it, you kind of like, no, I don't want to buy it. It's going down, right? It's like going down. But look, it came back up. And that's why I want you to be really careful. If you want to do crypto and do it right, you really got to listen to what the fundamentals are doing, and then you take action. Now, this is an example of Ash's favorite coin, okay? I show you this. Cardano risk 60-90% drop, warns trader with ADA painting a classic bearish pattern. Guys, don't listen to this. ADA is going to go down only if the smart contracts fail. I don't think so. I think it's going to be another Polkadot, okay? So again, do not look, if you look at the patterns like this, you are going to get fooled. We didn't get fooled with BNB. We're not going to get fooled with Polkadot. Thanks, Geoff.
Gee, Shukri, much appreciated, mate. You need to answer a question, though.
Yeah.
Is this the resurgence that we've been waiting for? On well,
yes.
let's isolate Bitcoin.
Yeah, let's
because
isolate Bitcoin, right?
It went up on fake news, right?
Yes, it went up. Where's the London man? Where's the guy from UK? Are you still in the room? I'm saying thanks to him. Thanks for creating that fake news on the London Underground paper, which said Amazon was going to Bitcoin.
He hasn't put his hand up yet.
Sorry, I thought you meant me.
Oh, yeah. Oh, sorry. Ash is from Brighton. Move to London, Ash, and create another fake news.
I'll do my best, mate. I'll do my best. I love all that.
So confidence restored is confidence warranted. Yes?
Yes, it is warranted because it is a cycle. And I've said that I've seen a similar pattern before. Okay, let me tell you what happened in 2017. The founder of Ethereum in 2017 sparked a wild rally around this time, July or August. It was around this time when he became the advisor for a company called Kyber Network. If you guys don't remember, Kyber Network was the first DEX. That was the first decentralized exchange. It wasn't Uniswap, okay? But that put on a rally on ICOs in that wild year. Now, recently, last week, Vitalik Buterin became an actor. Remember this. He is a character in something called the Stoner Cats. Mila Kunis and Ashton Kutcher. Don't ask me. I don't know about that. But he is now into NFTs. What do you think will happen? It has sparked another rally in NFTs, and I think this will carry on to the crypto market. We are waiting for the DeFi summer.
I think I've known you, Shukri, for about 12 months now, and I think I get 1% of what you're talking about every month. So I'm getting there. I'm about 1/8 the way to understand.
We're going to learn about cats on Tuesday. We're going to learn about cats on Tuesday.
Oh, perfect. Much appreciated, mate. We'll catch up with you, obviously, during the weekend on your show on Monday, as always.
Will do.
Much appreciated. We're going to go now and talk about, as Roy has asked, we're going to talk about oil. I'll see if I can bring an oil chart up. I think I can, because Ainslie has given me strict instructions on exactly how to portray her thoughts on oil. And Roy, this is for you and everybody else, of course. I'm going to read this. These aren't my words, they're Ainslie's. And she's talking about after several days of consolidation and a sluggish start to the week of price action, oil finally moved upwards, as you can see on the chart, buoyed from the US inventory numbers, with the commercial stocks falling to their lowest since January 2020, with indications showing this tightening is set to continue. Add into the mix that the threat of Iran bringing more supplies online evaporated during the week with yet another agreement put in place. There was a real threat that Tehran would flood the market. What remains unqualified and unquantified is the Delta variant factor that threatens the reopening of economies. Having reached a high of $74.22, oil has closed the week at $73.65, with price action holding firm above the monthly pivot on both daily and weekly charts, which we had waited patiently last week to break, test and hold. Weekly chart shows a ringed low indicative. Am I on the weekly? No, I'm not. I'm on the daily. Let's go to the weekly. So the weekly chart is showing a ringed low indicative of a strong move upwards. So Ainslie's outlook is for further retracement or consolidation before a move higher. So maybe a little bit of price action in here before eventually this dominant rejection bar of this level does take over and we see a higher oil price. That, thank you to Ainslie, who couldn't be with us today, but did leave me with that statement on oil. So I hope that helps Roy and everybody else. Let's turn our attention to someone I was watching last week who was absolutely on fire with his analysis based on the indexes. And he follows those week in, week out. And I'm very pleased to say a very good evening, in my case, to my good friend Lloyd. G'day, buddy.
Hi, evening, Geoff. Yeah, last week was I think it was a good start for me. Blessing from the trading buddies.
Mate, from what you showed us, those attending trading buddies for the next month are going to have a wonderful time.
I certainly.
What's going on? What's going on this week?
Right. So let me share my screen. Okay. All right, so as Geoff has mentioned, last week was a pretty good week for me. So previous week I was sharing how odds possibly go long. It did taken my profits. Same for odds Swiss. Oops. Yeah. So price retested the level, went short, and it actually went further, much more further than I anticipated. Yeah. So it was a good week for me. Now the upcoming for this week. Now I still don't really see much strength overall in the market, but there are some good news. And I do concur with Ainslie analysis because CAT is strongly correlated with oil. Again, the level 80 has been on my chart for a long time. It seems that price might actually just be bouncing off the 80. So if you look at the daily time, on the daily time frame, you can see that price essentially, let me zoom in. Yeah, we do sort of have a inverted head and shoulder, and price seems to be testing $80 at the moment. Yeah, so if by Monday or Tuesday this is a successful test, then I don't think it will have any issue zooming past all the way to 83. Yeah, so there's an opportunity for us over here. Next will be actually the British index, British pound. So you can see that essentially price is still in a range. So at this point, if I have to pick a ranging currency to be a strong currency, that means the rest don't actually display much hope. Yeah. So now pound, I do think that it actually strengthened, but it does have 140 in its way. Yeah. So, but that's always the midpoint. If it clears this, then it will go up to 142, which is previous high. Yeah. Other than these two that's displaying some strength, the rest does not actually look good. They are actually weakening. But on that sense, it means that we do possibly have some pairs that we can trade against. So the euro and pound is always buddies. One is ranging, the other is definitely on range. So I don't need to share too much. You can pick either of these to do your range trade. Yen. So yen still doesn't have much of a semblance of a range. Yeah, it's just that price really is in the middle of nowhere, so I put it in the middle. Now Swiss. Now this will be interesting. I rarely use a channel, but if it presents itself, then I'll just plot it in. So you can see that price clear 110. But really this level at this moment is actually kind of useless to me, and now because it's been broken several times. Now what's important is that price has really given me a consistent lower low and lower high, so it might just actually come back and retest channel. From over there, then we might have a really good shorting opportunity. So keep a lookout for Swiss. I don't think we'll be able to trade it on Monday or Tuesday, but in the middle of the week, this is something definitely that we can look for to trade. Short Swiss. Kiwi on the other hand, you can see that price has been sticking, it's really hugging near the 70. It doesn't seem to be going anywhere. But at the moment, since it closes below 70, my sentiment is that it will still go for a short position. Now, if we take away the horizontal level, this is still an interesting price. What's happening over here? You can see that this is really a bearish bar. Then all these are essentially just inside. It's just inside bar. Yeah, inside of this main bearish bar. So what I do have here is possibly a flag pattern. Now, if price really just comes up to the high of the flag, then I'll be happy to actually go take a short position. Yeah, but that will be quite a pretty aggressive way of trading. So we shall see how it develops out. Next is DXY. Now dollar, it has bounced off this level very beautifully, taking advantage of it. So officially this is the DXY is still in the range to me. So I just trade it all the way back down to 90 if I have the opportunity. And the last is the Aussie index. So Aussie index cleared from the range. Price drops all the way down, and now he has cleared a short-term horizontal level. So it does have a good chance to shoot all the way down to $70. Yeah. So in lieu of that, for the upcoming week ahead, what I'm going to do is actually I'm going to short Aussie Cat. Aussie Cat, I probably won't be trading it in the usual manner of break and retest, but there's a good chance that price might develop into a bearish flag. If that's the case, then I'll be trading the bearish flag. Otherwise, if no suitable entry is here, then I'll revert back to my usual trading style, which is a break and retest. And euro dollar, now this is a bit more complicated. Price essentially, you can see that it has already curved up, broke. So we might have a possible retest directly on Monday itself. If I don't have any suitable price action to trade, then I'll just wait for price to actually break the level, retest again, and trade from here. Yeah, so there's actually two possible levels that I can trade euro dollar long. So we shall see how that looks. Yep, so that's my analysis for the upcoming week ahead. And I'll be meeting everyone on Tuesday, Wednesday, Monday to Thursday.
Yeah. Perfect. At what time, Lloyd?
2:55 p.m.
Perfect. You got it, buddy.
Yeah. Okay.
Looking forward to watching the recordings of those if I can't jump in live at some stage, and enjoy that, mate. It's a great opportunity to chat with those who are interested, and I'm sure you'll have a wonderful time. Thanks for stepping in. Really appreciate it.
Thank you, Geoff.
Okay, look, I haven't met our next presenter yet, but I'm extremely happy to welcome a person of really such experience and knowledge to this show, which of course we do each and every Sunday, and this will be the case with this next presenter. It's also fantastic to have such a person of such expertise to share with you on all things stock market, which is relatively new to our program, and really I guess. Whoa! I'm getting some echo. Sorry, I'm not sure what's going on there. But I hope that will go away. to introduce, as I was saying, Gordon Scott. So because as the S&P ends yet another 6 months in a row of record highs, I actually wonder what exactly is going to happen in August and what's in store.
Hello, everyone. Just a quick market overview from Gordon Scott here. Hope that I can give you some insights on what will be happening in the U.S. market come Monday morning. And what our charts are showing us right now is that we've got an interesting setup. The markets have kind of created a situation where a big profit might be able to be extracted from a lot of people's mistake. Let me explain what I mean. I'm going to show you a few charts about the market in general, and then 4 charts of particular stocks that I think are really worth paying attention to in order to figure out where the opportunities are coming from. So let's have a quick look at that. What we're looking at here is the S&P 500, the NASDAQ 100, and the Russell 2000, that's the small cap stocks, and the Dow Jones Industrials. You notice that it's pretty interesting, easy comparison, right? Over the past couple of months, what is the S&P 500 doing? Trending up strongly. Closed this week up in the high range. The NASDAQ, similar. There's a little bit of a scare in the past week, but you see the buyers, every time we dip, the buyers keep coming in, right? So the upward trend is strongly intact. The small cap stocks is not that way. We got this downward move. Now, right here, what would have been, just Friday, would have been the opportunity for more sellers to push this down farther. If people were really panicked and didn't want to invest in the markets, we would have expected IWM, the Russell 2000 ETF, to have this big red candle. We don't. We've got instead this tiny red candle. So the sellers don't really have a lot of conviction right now. And the Dow Jones is kind of a, medium average of all those, which is weird that it's the average because it's a smaller index, you'd expect it anyway. So what do we got? We've got a conflict of views in the market. Generally, it's an upward trend. That's a default. People still seem like they want to buy. But will it stay that way? It's a really important question to ask because Amazon on Thursday reported earnings, and this is what happened the next day. They dropped 8%. Huge drop. In fact, all of what happened in the markets on Friday, this little bit of down movement in the S&P and this little down movement in the NASDAQ and this down movement in the Dow Jones, all of that was affected more by Amazon than anything else. Amazon comes all this way down, and the averages and the weightings and so forth move all the larger indexes down a little bit. Everything else was fine, but Amazon is down. Now, why is Amazon down? It's not because of their earnings were bad. Look, see, here's the numbers. They were coming in with an estimate of $12.23 a share, and they reported $15.12 a share. So they were 23% higher than analysts had estimated. It was good news. They had a record-breaking quarter for brand new highs of revenues. This is the biggest retailer on the planet by orders of magnitude, and they're doing great. So what's the bad news? Why the sell-off? Because in the earnings call they said, well, it looks like people are the pandemic effects are kind of getting over. People are going back to their old shopping patterns. And so we think that our rate of growth is going to be slowing in the quarters ahead in response to that, as a result of that. And people said, really? Slower growth for Amazon? Sell the shares. I mean, it's a serious overreaction in my estimation. However, let's look at it at face value. Is it true that people are going to stop shopping Amazon as much? Clearly not going to stop Amazon, but as much because they can go to brick and mortar stores somewhere else because, pandemic easing up. Is that what's going to happen? If it's true that that's going to happen, then what is going to happen with the travel industry? Look at these stocks that are just about to release earnings. TripAdvisor, Trip is the stock. They're up in 2 or 3 days. Bookings, that's, you know, what Priceline became, and Expedia and Kayak, the website and the app Kayak, that's all booking. Okay, so these are travel services. And then over here in the corner we got Delta Airlines. All of them are showing the same kind of pattern. Downward move. They recently bumped up, but they're getting ready to make, you know, another downward move. Delta did have this big drop. That's a weird thing for Delta to drop like this. See, if Amazon is saying the pandemic is getting over, so we're not going to make as much money because we made a bunch of money during the pandemic. If Amazon is saying that, then Delta should be going up in price, because if the pandemic is getting over, people should be flying, right? I can tell you, I've actually been on a couple of plane trips, in fact 3 in the past month, and they were all very full. These are all Delta Airlines, and if you look at Delta's earnings, they came in, they were estimated to lose money this past quarter. Guess what happened? They made money. I can tell you how they're making their money. I know this. They have not staffed back up. They're very lean on staff. You call Delta, and what do? You wait 5 hours on hold. They tell you hold times are 5 hours. Everybody hangs up. Nobody calls the customer support line. They don't hire as many customer support people. I heard from one of their agents that they're planning this huge IT upgrade, and that somewhere in the fall, probably you're going to have a lot better chance of accessing Delta agent help online. That'd be my guess. Meanwhile, they're not going to spend a lot of money trying to bring down hold times. Even if they tried, though, they would still have a hard time, because it takes a while to train agents to competence, and they are struggling with that. So you look at all that and you say, oh wow, Delta's got company problems. Well, those company problems are helping them, because they came in at positive $1.02 per share earnings, where they were estimated to be losing $1.38. I don't understand personally why the industry didn't say, that's amazing, the pandemic is over, travel's back, right? No, you see the earnings dropped down, the dip happened, prices got bought back up, but as of Friday, they sold off. So we got 2 contradictory things. Either travel's not going to happen and Amazon's going to do well, or Amazon's going to do poorly and travel is going to do well. What's it going to be, people? Pick a side. I feel comfortable with picking the travel is going to come back side. As a result, Trip, Booking, and Delta Airlines are all 3 probably interesting plays. I feel like TripAdvisor is the most interesting of them. They are estimated to only lose 10 cents per share. I'm guessing they will beat that. They will. Everybody's been beating earnings, so clearly I would expect TripAdvisor to beat that. Question is, how much will they beat, and how much will they think their prospects going forward are good? And we'll see how it responds. I expect that regardless of how it responds, it won't go down much more. We'll find some support long term, that is to say over the next 3 months. Trip will probably be a very good play. So if you're looking for my estimation of what is the opportunity opening up, I think the travel sector. It's clearly going to sell down a little bit more, but somewhere this week it finds a footing and gets ready to take off. Either that, or it's going to continue to go down, and Amazon is the opportunity. I think that's the less likely play. Hope that synopsis of the markets was interesting to you, and that you find usefulness in the trading ideas. And good luck to all of you guys in your analysis and teaching of people in the coming week ahead. Take care.
Yeah, look, thank you. Wonderful insights. I've got to say it. Not a great name right now for an airline. Delta, I mean. It's my turn to have a look at the charts, and I hope you're seeing my right screen, my correct screen. If that's not the case, please let me know. I've got Aussie yen on screen at the moment. I'm looking at the weekly chart. The weekly chart is telling me that Aussie, and I heard a few people talking about the Aussie and where it's headed and all the rest of it. Great question, in my humble opinion, because there are technical and fundamental factors affecting that, as would be the norm. I see potential here for a rally on Aussie yen. Now, the Aussie's been the weakest currency on the charts for the last couple of weeks, actually. Where is that buy point? Julian was asking that question earlier, and really, against the dollar, I think it's probably 70 cents, but who knows? I've got, however, a very, very nice, pardon me, confluence going on here with, this is the weekly chart I'm looking at. Key reversal bar there on the week prior to last week, and then an inside bar at a support level and a confluence of support here. We've got a horizontal level here around about the 79.80 mark. As I've got it, we've bounced off that already. We've got a channel heading north that has been broken and retested and rejected by that bar. And the only real issue I've got here going long would be that 82 level. But I think if we can get in around about, the 80, 50 mark, I think that's probably a reasonable thing to be looking at this week. We are coming off that level. We've got a higher high in place. We've got a higher low in place. And I think this could well be a point in the market where we can look to buy Aussie yen. So that's the first of my analysis. Second is CAD Swiss. Very, very similar chart in many ways. And I really haven't put too many lines on here. But those of you who are chart pattern enthusiasts will probably recognize this particular scenario that I will draw for you. That's a terrible color. Let's get rid of that. Let's go with white. You've probably got that in your sights, which was broken and now retested. Ascending triangle, call it what you want. It's higher highs and lows at the end of the day. After that breakout, we haven't really seen too much. And now we've got that big rejection bar on that breakout level, which is, as I say, around about the 72 cent mark. I think that's a real good indicator as to what's next to come. How do we get into the market? Well, that's the weekly chart. You could actually trade that bar if you so chose. Your risk reward on that's not fantastic, of course. But if you drill down into the smaller timeframes, you'll probably find something that works well for you. What I see already is a complete false break of a trend line, or a trend line, as I call them, going through here. So an entry there and a stop loss here makes sense to me as well. There's probably better opportunities on a smaller time frame, but that makes sense to me. So if you want to follow that CAD Swiss, I think it's probably not such a bad idea either. Euro Kiwi is the third of my, I won't say choices, I will say interesting pairs. This one's telling me that the week before last, we had a big key reversal bar, not quite off the resistance level that I've chosen there, which is around about 170, 150. And then we've had, again, an inside bar based on that reversal bar. I know we've had high test bars, low test bars, and they're all over the shop here. That's true. But what this actually tells me is that we've come off the top of the range here. So if you can imagine the range top is in that vicinity, then we've come off the top of that range, and we're probably going to have another look at the bottom of that range at some stage, which is anywhere, take your pick. There's a lot of levels there. So really, I'd be looking for a lower high in this vicinity come Tuesday, maybe even Wednesday. We'll see how that pans out. But if we do get that in this vicinity here, I think that would be an excellent opportunity to sell. What is it? Euro Kiwi. Maybe we've already got something like that on the 4-hour chart, we've had a big rejection of that level, same level I just spoke of, 70.50. You can see how we had a false break of that level, and since then we've been unable to get back above it, certainly no close on the 4-hour chart. That candle's really interesting to me because I do like to have a bullish bodied bar that is also a rejection bar. Could well be a lower high here. Monday mornings is a really, really difficult time for me to trade 4-hour charts, I've got to say. Not so much because I don't like the scenario, but what I don't like is the fact that the market could gap in the meantime and completely destroy that scenario. But what I would be looking to do come Tuesday on the daily chart is to look for that to be a confirmation of that lower high. Now I'm going to go to something that I actually hate to trade, and it's dollar yen. I think it's probably the hardest thing that I can do in a month of Sundays, this being one of them, and the first of the month. It looks even more vexing to me, and I'll tell you why. The reason it looks a little bit vexing to me is we've got well, in my opinion anyway, we've got a clear confluence of price here, or of levels here rather. The one thing that really disturbs me is this looks like a very, very clean false break, if there's such a thing, of that resistance trade line. It's also come off a horizontal level, given us a lower low. It hasn't really given us a lower high, which is interesting. But my criteria for a false break is fulfilled here, and with the retest of that resistance trade line, or trend line probably is as well, that looked very much like a potential not continuation, even reversal, if you like, of current momentum. That said, I've got a similar candle pattern to what I've just described in two of those previous charts that I looked at. Big key reversal bar here, and then another inside bar here. That always gives me the impression that the market is going to go with the reversal bar. In other words, long here. It is vexing, as I said, because I've got that clear false break. But overriding that to my mind is the fact that we're continually now getting, after that big bull rush, higher, 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 low, higher, 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 low, and we bounce off the bottom of that channel. I think it's reasonably safe to get an entry above that seller bar, because if the sellers are truly in control here, then the price goes south in concert with that false break that I've noted. But if that's not the case, then something else is afoot, and the buyers should come back in here and take us to at least the top of that range, if not that high. And if we take profit before that level, I think we'll be in good shape. So they are the four that I think are worthy of our attention this week: Aussie yen, CAD Swiss, Euro Kiwi, and dollar yen. I say that with clenched teeth because I think it's the hardest of these currency pairs to actually trade. And again, I've got a bit of an argument about whether we're going north or south, but it's a matter of, if we don't go south, then I think we're going north, and that's the key. Righto, I would very much like to thank all of the participants in today's show, and in particular Gordon for joining us for the first time, and we hope that's going to be a regular thing in our weekly market update. Thank you for your company, and we look forward to it throughout the week, when all the shows, as always, will be advertised on social media. Have a great week, everyone. I hope you got some good insights out of the show. Have a good one.